that the Fed has done this past week as essentially flooding the system with money.
Yes, exactly.
And there's no end to your ability to do that.
There is no end to our ability to do that.
You want to tell me what this is all about?
As I walk through the valley of the shadow of death, I take a look at my account and realize there's nothing left. Cause bankers been printing and inflating so long that even my mama knows that my savings gone. But I ain't ever crossed a man that didn't deserve it. Banks treated them like punks, you know that's unheard of. You better watch out which currency you're holding, or you and your money might be lying in chalk. I really hate this shit, but I got no hope. As they prayed, I see my secrets going up in smoke. Fool, I'm the kind of normie no savers wanna be like on my knees in the night, saying prayers in the street light. Been spending most our lives living in the Bankster's paradise. Been spending most our lives living in the Bankster's paradise. Kids spending most our lives living in the Bankster's paradise. Kids spending most our lives living in the Bankster's paradise.
What up, Vigilantes? I'm here with Josh Galia, founder and CEO of Voltoro, and now The Standard. And we're going to talk about what it is like to be in both the gold business and the crypto business. Also, what it is like to be involved in a very challenging endeavor, which is to create a gold-backed crypto. How are you doing, Josh?
Good. Thanks for having me on. It's great to be here.
My pleasure. Our pleasure to have you here. And as you know, we consider you a friend to the Vigilante family. And
Thank you.
Now I understand that a lot of people out there are probably asking themselves, well, what do you mean gold, crypto? How does that have to do with each other? Actually, Voltoro, it has always been an entity we have recommended for our subscribers because we like what you guys are doing. Could you explain what Voltoro is to everyone watching?
Yeah, so Voltoro was an idea that I had in 2014 when just after Mt. Gox collapsed, which was the first Bitcoin exchange in the world. And it was basically that we need to figure out how to stop trading between Bitcoin and fiat, because why the hell are we got into Bitcoin to get away from fiat. Now we're just obsessing about the price in US dollars. So we created an exchange where allocated gold could be traded against Bitcoin, so that when Bitcoin's up, they could buy allocated gold, and when Bitcoin's down, they could trade the gold back to Bitcoin. And the thing is that bank accounts are only insured to, well, in the US, to 250K, most places around the world, just 100K. So we saw that with Silicon Valley Bank, right? The bank accounts are only 250K worth. I mean, they got a type of bailout, so it's different a little bit, but if every bank went down, it's shit house. So it was basically an idea to have people saving in a fully allocated asset that is fully insured, fully auditable, and stored in a top-tier vaulting facility in Switzerland. And so for me, that was just a much better way to go than trusting banks, because banks, you can't audit them, you don't know how much they've got, how much they're rehypothecating. We know the story. The Vigilante crew know the story. And so gold was a good answer for that. And then I also built a transparency protocol so exchanges could be more transparent, called the Glassbooks protocol, which we integrated into Voltoro. And now I'm working on a true stablecoin project that is basically fully collateral backed, because I was screaming and shouting about Luna and all these other ridiculous stablecoins that were algorithmic, and saying they don't work. And it's not because I'm some sort of genius, it was because I've seen it before over and over again. We had BitShares, we had Waves, we've had plenty of people trying algorithmic stablecoins. They don't work. So what works is people locking up assets with which is similar to the gold standard, right? The government locked up gold and then issued paper credits to that gold, and that gold was backing that paper. But we can do it even better by allowing people to lock up, Ethereum or Bitcoin into smart contracts that only they control. We don't have access to it, nothing like that. And tokenize gold into one smart vault. They lock it, and then they issue themselves debt from that that is pegged to the dollar, and at 0% interest. Why do we have interest? We don't need it. So to be able to borrow from yourself, so you are your own central bank. You borrow from yourself, and it's backed by the collateral that you've locked up there. So and there's some other projects obviously in DeFi that do that, but we take it to the next level with zero knowledge proofs. We've also got in vault trading, so you can put multiple collateral into one vault and trade it. So even though it's locked, you can say, oh, look, I think Ethereum's going to go up way more than Bitcoin, so I'm going to trade all my wrapped Bitcoin to Ethereum. Or, holy, the market's crapping itself, I'm going to trade it all into tokenized gold. And so now you can trade your collateral to tokenized gold, and it sinks, and you're fine because you're not sinking anymore like a ship. So yeah, that's what we're building now, and really because we need a standard before these CBDCs really kick in. We need a true stablecoin solution that is stable, that is fully backed, decentralized, and has some privacy aspects built in, which we can talk about. But there's so much happening that we need to build this infrastructure.
Love it. That's awesome. So one of the problems that we find with gold-backed cryptocurrencies is that of liquidity. We would be curious to know how you plan to provide such liquidity needed.
So there's different sides to the liquidity thing, right? So the main one I see is that, gold in itself is actually the second most liquid market in the world under the FX market, right? It's absolutely flush with liquidity. The thing is that we need more and more top tier facilities to tokenize their bullion. This bullion is good at two things. It's good at holding value and gathering dust. Like, that's basically what gold does that's sitting in vaults. It holds value and gathers dust. So we need to be able to do more with that gold. We need people to be able to say, look, I've got, so much value and savings sitting in gold, but I want to leverage that value. I want to borrow against that value. And allowing people to put that into smart contracts and then borrow against it is, I think, really, really good. It also helps break like a poverty cycle, because a lot of people that are too poor, they can't afford to save and spend, So having the ability to save a little bit and spend by borrowing against those savings is really great. The thing is, even if you get liquidated, you would have had to sell it anyway. That was the only other option. So why not give that option first? Yeah, it's 10% over because you have to be over collateralized by like 10%. But I think it's a really, really good option to sort of break that cycle of poverty, that people can start to save and actually build a little nest egg, and still have the ability to have some liquidity and pay rent and everything else.
Right on. Will the standard coin be available in major exchanges?
Yeah, obviously that's the goal. Right now we're just beavering away. It's available on Uniswap. It's actually available on Coinbase, TST as well, if you're into that sort of thing. But I really like Uniswap. I think it's just such a fantastic way to go. I love the liquidity pools.
So the standard is already out, is what you're telling me.
Yeah, the TST token, that's the membership governance token of the standard protocol, and it has a whole lot of reasons why people accumulate that one. Our focus
when
is
did
really
it launch? When did the governance token launch?
About 4 months ago, just before Christmas. We had what's called an IBCO, which is an initial bonding curve offering. It's still going, actually. You can still participate in that. It's a way to basically you buy the first stablecoin S Euro at a discount, and because people believe that it will go up to 1. So right now it's at 85 or 89 cents, and the more liquidity that goes into this pool, the less that discount becomes until it reaches 1-to-1, and at that point it becomes a stablecoin. And this pool, it belongs to the community. It is used as a stability pool. And then these smart contracts come out, being released actually at the end of this month, where people can then lock up funds and borrow, and basically borrow more S Euro. But this stability pool is used, that's built, is used to basically always buy back and sell at a 200 basis point spread. And so, yeah, I mean, you can. So you buy that discount, and while you wait for the S Euro to reach a 1-to-1, which will be at the end of the month, you can actually sell it back to us for a bond with like USDC or something else, DAI, I think, and that goes into Uniswap for liquidity, and we buy that liquidity off of them for TST, basically a bond that pays out in TST. Okay. It's complex, but if you're into DeFi and stuff, you get it.
Right.
Yeah, but it's a great way to participate. It helps the protocol grow. It rewards you for being an early adopter. But what I'm really excited about are these smart vaults that are coming out, and it's super exciting. We're going to be one of the first projects to be launching on the Polygon zero knowledge EVM, the zero knowledge proof EVM. And while the privacy side of that isn't like hardcore yet, it will become more and more hardcore, because privacy is probably one of the most important things in the world, actually, in terms of finance. Like, and we can talk about why that is, and I'm sure you guys have talked about it at length, and your listeners know why. But I think it's always important to reiterate that if you have a bearer-based asset and you're just wandering about with that, you might not be able to crack it with maths, and you might not be able to hack these things, but you sure can get smacked, threatened and extorted. And so you don't want everybody knowing everything about your financial situation. It's just a terrible system if that's the case. So it's very, very important.
Right on. So then the TST token is an ERC20 token, an Ethereum token, and then you guys are going to be launching on the mainnet, which is in Polygon, the zero knowledge proof Polygon chain. Is that correct?
That's correct. Yeah.
Okay.
Yeah.
Okay,
We're waiting for some other infrastructure like Chainlink and such to port over there. But we're pretty much we're in the testing phase right now, last steps of testing. So it's really exciting.
So right now the ERC20 token people can buy on, you said Coinbase, and the other one was Coinimi?
No, the other one is Uniswap.
Uniswap. Okay, so Uniswap and Coinbase. Okay.
Yeah,
sounds good.
Yeah. So if you just go to standard.io, you can buy it through the app as well. You can grab it there. So yeah, like, I guess, lending. So why people are interested in this is the idea is that when people borrow and it's not just S Euro, we're going to be having S peso, S Indian rupee, S US dollar, S British pound. We're doing, like, the protocol allows us to have a stablecoin for every major fiat, running pretty much a blockchain effects market. So there's a mirror of the real effects market. And all of these instruments, as people are buying, converted, like locking up funds and borrowing from themselves at 0% interest, they do pay a little fee to mint that first S Euro. So all of those fees basically get dropped onto stakers that are staking TST. It doesn't just get dropped to not be a security. They have to do a little bit of work, so they have to come in and just maybe do some voting or some sort of show some participation and actually earn this stuff. But it's really exciting, and
yeah, sure is. I would want to congratulate you, actually, Josh, because the gold-backed crypto process as a business model, in our opinion, could be seen as one of the toughest business models in the entire space. And for you to take a jab at it, that means a lot to us. Thank you for doing that.
Hey, no problem. And there's a lot of projects that just basically say, okay, we've got some gold and we're going to tokenize it, and now you've got an ERC20 for the gold. But I find that is not enough. People don't know how much an iPhone costs in grams of gold. They don't know how much a mouse costs in grams of whiskey or milk or whatever, bread. They know how much it costs in their local currency. And but the best way to go is to be able to tokenize gold and have as many companies as possible tokenize gold. And our protocol, our DAO, basically then does the due diligence on each one if they can be onboarded as collateral type. And now then people can use that gold and actually back a fiat pegged stablecoin that is backed by gold. So now we have a gold standard without begging the government for one. We just create our own private gold standard amongst the people. And what's beautiful about this is that now inflation starts working for you. The wealthy have always taken advantage of inflation over the years. And how have they done that? Well, they've done it by borrowing money as much as possible if they see inflation coming. And not only that, they borrow at a fixed interest rate. And not only that, and this is the key difference between very highly elite wealthy individuals or family trusts and the normie, the difference is that they can go to their bank account and say, look, bank manager, I want a loan. I want mega loans against my property here, and I want it at a fixed interest, and this is key, I don't want it reevaluated. And they're like, well, of course we'll do that. It's not going to zero. Like they're so cocky about their own the government currency. And when they have that in writing, then they borrow and buy houses galore. As the inflation kicks in, maybe they spent $1 million on a house. In 10 years' time or 5 years' time or 3 years' time, with hyperinflation, it can happen very exponentially. That a can of Coke costs you $1 million. And now you've bought a house for a can of Coke. So with the standard, we give every person that ability because it's fixed interest at 0%. It's mathematically coded, so it can't get reevaluated. And you're borrowing at that, and then inflation basically pays off your debt. So you can save, you can issue yourself liquidity, you can trade the liquidity, and not only that, let's say you've locked up a whole bunch of gold tokens or Ethereum and Bitcoin or whatever and borrowed against yourself, bought a car, and then lost your job, and you've got all this money sitting there, you can't access it because the smart contract says, no, you can't access it until you pay back that debt. Well, what you can do is that smart vault, it's basically a collateralized debt position, a CDP. You can sell that as an NFT. So now I need liquidity. I've lost my job. I know I've got all this liquidity there. I could say, okay, put it on OpenSea, you buy it, and now you get access to my smart vault, both the debt and the collateral, and then you pay back the smart vault and take out the debt. So we're really innovating in the space as well as possible to build real true solutions for the future. And right now, the federal government in the US just released FedNow, which is a complete travesty, a nightmare. All our grandfathers died in wars overseas to basically now have us enslaved by the currency that's getting issued, getting controlled, every transaction getting controlled by the Federal Reserve or the federal bank of any country that you're in. So right now is the time to innovate, to build so that there's an exit door. It's okay. Those governments and stuff, they can do that. They can create all of these things, but we need at least an exit door. We need at least a thing to say, hey, if you're going to screw this up, I can take this, and it's a stable, solid foundation. No, and so that's important to me.
Well, congratulations. I really commend you for doing this work. I mean, this is amazing. And yes, I mean, there's so many topics that I want to talk to you about right now. I actually had a conversation with some friends about this kind of technology earlier today, and we were talking about how the world can change in a heartbeat now. A decade ago, we had the bucket challenge. We had a bunch of challenges on the internet, and people just, they go for these challenges. We saw people converge around GameStop. So it seems to me as if what you're innovating, if it is marketed right to the right people, which is pretty much the base in the world, people that are against everything that we're talking about, the evil of central banking and the hyperinflation of fiat, something like this could really be empowered by a mimetic. And so I would love to see what mimetic comes out of this, what marketing mimetic comes out of this, because I can see something like this really grabbing the attention of the entire crypto space and the gold precious metal space at the same time for them to converge into one thing. So one aspect of that I want to talk to you about is about the storage fees. The storage fees have been known to be pretty high. Can you maybe talk about what you have in mind, what those storage fees will look like for the end user, for the business itself? For now, this is not proper business. This is a DAO, correct? You guys are creating a sort of DAO. The governance token
DAO.
is a DAO. Yes.
Yeah.
Okay.
And there's no storage fees. Like there's zero storage fees because you're not trusting us with the collateral. It's not like a pawn shop where you give over your stuff and we then lend you some money. That's the old system where you have to trust. That's the Silicon Valley Bank. That's the Celsius of the world. That's the BlockFi nonsense. These are the company. This is why crypto was invented, to get away from this crap. And all we've done is headed back to it because it's efficient. But we don't need this efficiency. The efficiency can happen using zero knowledge proof rollups. So when you lock up assets with the standard, you're locking it up in a smart contract that only you have the private keys to. Remember, folks, not your keys, not your crypto. So now by opening up your own private vault in a smart contract that you can only control, you have the keys, you put your funds in there, you lock it. No one else, no one can get access to it. It's there in this smart contract. Now, the only way that other people can get access to that is if your smart vault gets liquidated, because the collateral drops below the amount you've borrowed. Because remember, there always has to be more collateral locked up than stablecoins in the ecosystem. And that's how you keep a stability. So mathematically, if your personal smart vault, you've got $1,000 locked in there, and you've borrowed 500, let's say, and there's a huge bear market crash and it drops down, and you don't do anything, and then it hits 500. Actually, it has to be over 10%, 110%. So as soon as it reaches that threshold, the smart vault will get liquidated, and basically TST stakers, the governance token, they get to basically they put their funds into a liquidation pool, and they get a share of all those. So they get to buy up those assets under market value, 10% under market value. So that's the only way that we've put in a lot of ways for people to protect themselves from that, like selling the debt as an NFT, like trading the collateral to, let's say that you've got a whole lot of Bitcoin and it's just tanking. You just trade it into a tokenized gold. You're still in a bearer-based asset, but it's at a different train track. You're not on fiat. And this was the problem that Maker did. Maker allowed collateral type like USDC, and that's why we saw Maker depeg, because USDC had $3.3 billion sitting in Silicon Valley Bank. Now, I've been warning of this for years with centralized stablecoins. You have so many counterparty risks. You have the counterparty risk of Circle, the USDC company, I think it's Circle, going broke and playing silly buggers, rehypothecating, whatever they want to do. Not only that, you have the risk of the banks that they use going broke, playing silly buggers and rehypothecating. So now you've got two counterparties. we need a way, and the problem is that Maker then used that coin and said people can collateralize their DAI with that. I don't know why they did it. I feel like it's almost an insider job to destroy Maker, because why would you do that? Why would you the whole point of collateralizing is you think the thing that you've used as collateral is going to go up in value. Why take USDC, which is going to stay stable to the US dollar apparently, lock it up and then borrow DAI? You're basically handing off any risk, because DAI can also be confiscated from you. The company, not DAI, USDC can. They can freeze those funds. That's in those smart contracts. So, anyone using USDC is wrapping USDC in DAI. Now they've got DAI that can't get confiscated. So what have they done? They've just palmed off the risk of confiscation onto the network. So when USDC went down, depegged, because they had 3.3 billion sitting in Silicon Valley Bank, so did Maker, so did DAI. And so we really don't want to have that same scenario happen. We want to have as much diversity in the hard assets side of space, but we also want ways, due diligence and processes in place for any collateralized token that is based on a physical good in the real world, so tokenized gold. So yeah, there's some really interesting challenges. I think when you talk about storage fees, there are, obviously, when you are trusting, when you're buying gold and you're not storing it at home, which is also very dangerous, and insurance companies will tell you how dangerous it is by it in price, because it's very, very expensive to insure precious metals at home, because insurance companies, they do one thing good, and that is price risk. And it's extremely expensive because they know how risky it is to hold gold. You tell one person, your girlfriend, and then you leave her, you told her years ago, you've forgotten even, she's angry, she tells someone else, yeah, and he's got gold, and then someone comes and breaks into your house. Or you've hidden it so well that you even lose it. Or like, there's so many risks. So holding it in a good quality storage facility, I want to be paying good fees. If you are buying allocated gold that's sitting in a storage facility and you're not paying fees, you've got to ask, where is that from? Because there's real world costs. There's men with guns. There's insurance. There's auditors. There's big fat metal doors. There's, you can't have that for free. So where is that money coming from to store that and to secure your wealth? You want to be paying fees. I'm happy. It's the same with exchanges, centralized exchange. If there's a centralized exchange that's not charging a trading fee, I'm like, I don't trust you guys, because I know how much it costs in regulatory and all sorts of costs, security, programmers, everything. You need to get that money from somewhere. So
so
anyone.
We've seen in other business models for gold-backed cryptos that don't charge a storage fee, that they have to make that up as a trading fee on the exchanges. Now, in order for that to be profitable for the business and for it for them to meet their costs, they have to have a large enough volume for this trading, so that they can offset the cost of the storage fees via trading fees. So is that pretty much what your business plan is also aiming towards?
Well, interestingly, there's not only that problem. The problem is if it trades on an exchange, those fees aren't taken. These are on-chain fees, so they have to move on-chain for those to be paid. Now, Pax Gold has managed to earn enough with that. That's fine, but there are issues, and with tokenizing any real world asset, and this isn't just a thing with gold. It's a thing with anything, real estate, cars, art. That all these people are talking about tokenizing everything, but there's real world costs, which is called demurrage. It's actually a very old concept. There's real world costs to holding value. And so it's a challenge. We're working to build, basically the business model with us is the same as everyone else. Want the velocity of these tokenized gold, but we're actually just at the standard. We're not tokenizing gold. We have, if gold companies come to us and want, because we've been in the gold and crypto industry longer than anybody else. I've personally been working in crypto since 2010. So we have great people. So if a gold company comes to us and says, look, we want to tokenize our gold, we want to give our gold investors more options, we will help them to tokenize properly and deal with all the storage fees and all that stuff. And then the DAO will vote whether it's good enough to use as a collateral type. But we ourselves are focused really on the lending protocol, on the stablecoins, and writing really damn good code to be secure. Yeah.
Yeah, it sounds like it's a challenging thing that people deal with when they enter into this sector of gold-backed cryptos. So how do you see yourself meeting this challenge of making sure you have large trading volume? Like, what's the game plan? What's the to-market strategy to make sure that this succeeds? And that you can, that the trading fees do offset the cost of the storage fees.
Yeah, I mean, there's also a small spread on the purchase of these gold tokens, but I feel that as the world becomes more and more tokenized, let's say, as we head more into this blockchain space, and especially everything's speeding up now with AI, but as this happens, more and more people will get used to it. And so I do see the velocity of money in terms of the blockchain space just getting bigger, especially in stable currencies. If I go to back in 2014, when we were working on first launching Voltoro, everyone wanted to be paid in Bitcoin, and that was it. Ethereum then was launched a bit later on, and then people wanted Ethereum and some other coins here and there, Litecoin and such. But it was really in 2020 when people definitely just always asked for stablecoins, and that was because it's just much easier to account for. And I even seeing it at conferences. When I go to a conference, people are like, oh, what do you want? Tether, and they're like, they don't even mention the speculative coins, because what they do is they take payment in these stablecoins, and then they buy the speculative. They go and buy Pirate Chain or buy the coins that they want afterwards to speculate on. So to answer your liquidity thing, we're working on that. So I'm not going to say we're going to launch and there's going to be instant massive liquidity. This is a grassroots effort. We don't have huge bankers and massive VCs coming in and helping us, because we don't want them. We want this to be grassroots. So it'll be slow. In the beginning, there won't be that much volume. But as more and more people come in, and we'll incentivize this volume, obviously, with bonding, and there's lots of ways we can do this. There's been plenty of experiments in the crypto space, so we can know what's worked and what hasn't, and we'll adopt those to launch these stable coins. For instance, SURO is already over collateralized. It's not really trading yet because we're still working on these smart vaults. But as soon as that happens, and we're building partnerships like crazy. So if any of your listeners have other projects and they want to partner with the standard, please just reach out on the standard.io, and we can do some cross promotion and such. But there's so much exciting stuff happening, but I can't promise anything. It's
no, of course.
Like, it's an experiment, and I really want people to know it's an experiment. Don't bet all your eggs on one horse. So, but yeah, we're doing the best we can. We've got a real damn good team. Voltoro has been around since it was launched in 2015, was built through 2014. It's never had a hack. Not many exchanges that all can say that. Kraken, Coinbase can say that, and that's about it. I think even Coinbase had a breach. But we know what we're doing. We're security obsessed. We want to build great stuff. So come over and to the standard.io and say hi on the Discord and help us out.
No, I love it. I love the vision that you have, and I love the way that you are very creative and you incorporate all of these technologies in one. You are incorporating your knowledge in precious metals and gold with what the world needs, which is an actual stable coin backed by gold, by reserves. We need that. The world needs that. You're also incorporating zero knowledge proofs, and you creating this concept of a zero knowledge vault for the contracts that could be sold off as NFTs on OpenSea, which is the largest NFT marketplace in the world. It seems to me like you're doing everything right, and I'm really honored to have you on the show and to actually, am I the first one to talk about the standard, to interview you on the standard?
Not yet.
Did someone beat me to it?
Not quite. A
Okay.
couple of people have talked to me, but you're very early. That's for sure.
Good.
We've been stealthy. We've just been beavering away, and I talked to some people about it, but what's important is that we get out there before these CBDCs, because it's a race for network effect. Now, CBDCs will automatically get network because they'll just incentivize people. They'll say, look, your US dollars are going to run out of value. No, they won't even say that. They'll just say, oh, you want the stimmy check? Well, you have to convert over to a CBDC, which is just one click on the bank, internet banking, and suddenly you've got a CBDC instead. And maybe we can quickly talk about that and what that means, because a lot of people, they don't understand. They're like, well, a CBDC is just a digital currency, and I'm already using my card. It's already digital. So what's the difference?
Right. It's control.
Control.
Yeah.
Exactly. And right now, if I make a transaction with my credit card or my debit card, my bank puts an IOU up to your bank, and that's with every customer that might have sent to your bank. It's at the end of the day there, and their bank, some customers might have sent money to other customers at this bank, and at the end of the day, those two balance sheets get sent to the Federal Reserve, and the Federal Reserve then says, okay, this bank owes more to this bank, and then it's clear. So they just do one transaction, boom, and it's settled. But the central bank doesn't know all of the details now of each transaction. They just know, okay, this bank owes this bank that much, boom, over and done for the day. Now, yes, your bank has all the details, but there's lots of checks and balances in place, at least a little bit. Yes, sure, the federal government can come in and get a warrant and find out exactly what you're, but there's steps involved. With the CBDC, the central bank is taking note of every single transaction. It's not just going to your bank now, who are obligated to keep your privacy, by the way. The central bank now, if you buy a pack of chewing gum, it goes up to the central bank gives a yay or nay, and then it goes through. So suddenly there's a climate, we need to curb climate change. We've already had enough oil for this month. We're going to cut, you're not allowed to buy this amount of petrol, this amount of gas. Maybe there's an obesity epidemic. Oh no, we've got to ration the meat, and you're not allowed to buy that, or I don't know, whatever they come up with, whatever harebrained idea they come up with. There's another pandemic. Oh, you can't spend that money outside of your 1K radius of your home, and by the way, you're not allowed to buy this and that and the other thing. So it's ultimate control. And if you go into the FedNow website, they literally say that they can do things like have an expiration date on your money. So you can save, but if you don't spend it within a month, then your money expires. Like you're not saving in money anymore. Now you're saving in vouchers. So it's really, really dangerous. So we need a proper solution. We need true we already have Bitcoin. It's wonderful. It does what it does. We have things like Zcash and Pirate Chain and one's focused on privacy. But we need true DeFi where people can save without trusting a bank by themselves. They can borrow from themselves, and they can repay and deal with currency that they understand. And we need that for the network effect.
Your mission, if you choose to accept it, is to de-dollarize the world, baby. So are you guys going to help out or not? Because we have no choice. And one of the things that gives me solace and that gives me peace of mind is the awareness that government can't really create money. It's, money really comes from market demand. So I think that there is going to be in the future a viral moment. There's going to be a viral moment that is going to spread like a mental contagion, where people are going to, just like they did the bucket challenge and this other challenge and this other BS, challenge, whatever. We've seen a lot of these things, but there's going to be a moment where where people like us are going to say, okay, it's time. And there's going to be one application, one wallet or something, or some challenge. There's going to be one challenge out there where people are going to lock in their money and they're going to do it and show the world that they're doing it. And this could be the idea of, I'm going to buy some crypto, lock it into a specific wallet. And here I'm giving you guys an idea, locking it into a specific wallet. And it's going to be in contract where I can't touch it till Bitcoin's $1 million. That right there could give us that viral moment. So if someone watching this creates a bucket challenge type zeitgeist moment for the world, where people like us can actually come together and be part of a movement, because what happens is that we have crypto and everyone kind of shoots darts to crypto and crypto development and crypto this, crypto that. And then there is this underlying story. There's this underlying story that we talk about that you pretty much just explained by talking about CBDCs and the evil that they are proposing for the world. But people like you, people like Jeff, people like Max Egan, even like Alex Jones, like people listen to these individuals and they are like, okay, cool. I see the story you're telling me. I acknowledge the story you're telling me, but there's never been that moment where that person who's an observer can become part of the movement in a very visceral way, where they can actually be part of taking down the dollar with their action. And yes, we can say that crypto is that, but there's never been the configuration to actually give us that tipping point, to give us that catalyst where everyone is now doing it. Sure, we have social media where we talk about it. Sure, we watch shows like Jeff Berwick and Lucy, but people have not yet had that moment. And maybe, just maybe, this conversation and the standard can be part of that moment. What do you say, Josh? You want to make that moment?
Yeah, sure do.
It could be. It could be because let me tell you something. You are combining gold and crypto. And it could be that someone uses the standard and the Vault system as that catalyst. It could be, or it could be just a Bitcoin wallet that is locked till Bitcoin is $1 million. I don't know. It could be anything, right? So, but I'm just saying that there needs to be, let me explain it this way. We saw within 24 hours the collapse of FTX. Within 24 hours, we saw the biggest migration in crypto history, where all developers from all different blockchains moved to BTC due to ordinals. So we do know that large movements of convergence can happen and will happen, as long as you give people a catalyst, as long as you provide people an option in the market where they can be part of something that they are participating in, with the possibility for them to profit as well. So
Yeah.
wouldn't it be cool to be part of something tangible that you do, that you are contributing to making sure that CBDCs don't happen? And sure, we can tell people, don't, buy cryptos to fight against CBDCs, but there needs to be something, Josh. And I'm trying to figure out what that something is. You know what I mean?
Look, CBDCs will happen. There's nothing you can do about it. They will happen. But what we want to have is that exit door, that ability to choose, and that's what's important. And really, that catalyst moment, I agree that there might be that one moment, but I feel like, liquidity always goes where there's less friction and more profit. So why would liquidity stay in the banking system if you only earn, a few percentage points interest, and you have to pay about 1,000 middlemen before you get your cut of that? When you can just use DeFi, it cuts out all the middlemen. You have you've reduced friction and inefficiency by orders of magnitude on the lending side. So you can actually earn a way larger yield in DeFi because you're cutting out all the middlemen. You're putting your money directly into a market maker, an automated market maker that you control. And in the banking system, you're giving it to about 5-10 different companies before a real person market maker sits there all night, speculating with your funds. So I think there is no choice but for most liquidity to end up in this field. It just takes time. And on the borrower's side, why would you have a home loan at 6% when you could get a home loan at 0% within DeFi, and not even sell? The only reason is because you don't have those savings, and that is a problem. But people are working on stuff, and I think getting the culture of saving back rather than the culture of spending on credit is really important for people, especially the younger people, that because they're just constantly obsessed with buying everything on credit. And so getting back to saving and allowing yourself to save and then borrow against those savings rather than taking credit out on your credit rating is a much better way to go. But yeah, I think at the end of the day, liquidity is heading into this space because of those efficiency gains. I think that's really what makes it. But yeah, there's lots of fun things you can do with smart contracts. I mean, you can build an alarm clock where you put crypto in, and every time you get up late, it sends some to charity or whatever like this. You could anyone, and now with ChatGPT, you can start to even play with writing your own smart contracts, and even if you don't know that much about programming. So it's going to be amazing. The future is going to be absolutely phenomenal, but we definitely want those exit doors from the CBDCs.
Right now, we are watching in the United States as we see senators like Pocahontas, and she wants an army against crypto, right? And we see a lot of this anti-crypto rhetoric starting with these politicians that are really ignorant about the topic to begin with. Like it's crazy to me how little they understand the crypto itself, and yet how loud they are about it. What regulatory challenges do you see ahead for businesses like yours?
Well, Voltoro has really dealt really years with dealing with regulatory arbitrage, where you're trying to arbitrage between different countries' regulations, and it's so tough. It's so tough, and and that's why I kind of cringe at people that yell and scream at crypto businesses and say, "Wow, how dare they ask for KYC? Fucking assholes!" They have no choice. It's basically do this or get shut down or get huge fines, and so they have to play within the rules of these different countries. This is, I mean, I'm just a lot of the regulators, they really don't know what they're doing. It's very unfortunate. And then many people scream for more regulation. Well, guess what? Sam Bankman-Fried he already he was working in a regulated environment. He was regulated up to the hilt. Did it help? No. He just paid off the right people. If you want to do criminal activity as in human contracts, you can always scam people. And that's why I'm all about DeFi. Regulation, I'm all about rules. Any anarchist is. It's just I don't like rulers.
Exactly, yes.
So by having rules mathematically coded into these smart contracts, there's your regulation. You can read the regulation, and the smart contract will execute perfectly those regulations. Now, there's obviously sometimes there's fine print, but this is where the crowd is great. This is again why AI is good. AI can read the contract and tell you any fine print that might be in there if you can't code properly. Like, oh, by the way, so and so, this and this can happen. So by having smart contracts, I'm not anti-regulation. I'm just anti-government regulation. I think code is the best regulation because it regulates the contracts. It sets the rules of those, and you can choose voluntarily if you would like to use those rules. And when you do, well, they're executed perfectly through code. And this is where we need to go. No more trusting senators and people, because they even if it's a saint of saints that you trust with everything, they are interfacing with corrupt people that might corrupt them. So humans are fallible. We need to build, and that's not to say we need a technocratic society where everything's automated. That's also awful. But in terms of dealing with finances, I would much rather trust smart contracts that are well audited, code audited, well structured, written and audited, open sourced and audited by thousands of people. That's better than dealing with human contracts and people that can be corrupted.
Yeah, wow. The question always is begged that well, how do you account for dispute resolution when there is no such thing as like a market-driven legal system that comes from cryptography itself? So, when things really go bad, unfortunately, as we live right now, people still go to the government. And I've seen this happen even amongst, anarchists.
Well, Luke Dash Jr., like some of the OGs, he went to the CIA. I mean, the thing is, if you have these tools of the government to enforce for you, then you're going to use it. You just, people are sane actors. They're not going to not use a very powerful force that they can try to use as an ally.
Correct.
The thing is, so it's irrational to think, oh, people wouldn't use them, even if you're an annex type. But what I think the important thing is, how do you not let it get to that stage in the first place? How do you build regulations as math instead, and deal with and have proper rule sets that everybody can agree on? Of course, if there's a hack and you have the ability to get a government institution to try to recover those, you're going to do everything you can, right? It's just normal. But there are market things like there are markets that have built up where you can actually pay a little bit more. I think Open Bazaar was one of the first to sort of do this back in the day, where you could go on there as an arbitrator, and you could be paid as a trusted arbitrator against dispute resolution, and say, look, okay, let's say you paid for something and you never got it. I would ask for your proof from the seller's proof that they sent it. I would ask from your proof that you never got it, whatever that is, or that you paid for it. And then I would have to do, and this is the great thing, because it's a private marketplace of arbitrators instead of a court-appointed, a government-appointed judge, I cannot be corrupt. I shouldn't be corrupt anyway, because if I'm busted being corrupt, then I lose business in the future. So I'm going to try and do the fairest I possibly can to arbitrate this situation as fair. And these systems already happen where you have a marketplace of private judges dealing with arbitration and dispute resolution. So this is one step closer, and they do exist. And then there's other things that we can do, is like with prediction markets and such, where we could start betting on certain outcomes, like, let's say you buy a property off the plan, and you start, you have insurance. Rather than paying a centralized insurance company, we open up a betting market. So insurers would bet on, no, that will never, the builder will never go broke. And you could bet on, yeah, they will go broke. And then, so everything's going well. All of a sudden, the builder goes broke. Then that pot automatically, with oracles and stuff, gets liquidated, and all of that comes to you. So now we have decentralized insurance. So there's lots of ways we can deal with dispute resolution with insurance in a mathematically regulated space, rather than fallible human.
No, definitely. And we've seen that with like Bisq.network, Agora
Yep.
Desk, local Monero. Like we've seen this in many marketplaces where they've never experienced any theft, because as long as people are following the rules and using their systems of arbitration, the money's held in escrow for both parties, and things seem to flow. Like it's almost like mathematically driven. The incentives are always aligned to make sure that there is no foul play. So I agree with you. I see those as examples of what is possible. Overall, when it comes to finance, the solutions are not that difficult. Like you said, they actually can be computed into existence. So let me ask you a couple questions about Voltoro, because we love Voltoro at Crypto Vigilante, at the Dollar Vigilante. We love Voltoro. I haven't followed up on this, but are you guys taking Monero?
Well, because of the FCA and stuff, we couldn't. We even had to delist Dash, and that's ridiculous because Dash isn't even that. It's just got an inbuilt mixer, but you can do the same with Bitcoin. You can do the same with Litecoin. You can do it.
Right.
But we're having to move out of that jurisdiction because the regulators just don't know what they're doing. Unfortunately, I think the UK could be a really good place for crypto, but their regulators are so lazy that they don't want to learn. They don't want to understand. I don't want to call malice and say that they're doing stuff, on purpose, but some could, if you were cynical, you could think that they were being run by the banks. So it's a really tricky regulated space. We are now in a different jurisdiction that is still European, but a lot friendlier, but we still work with all the same partners. The biggest Boolean dealer the second biggest in Europe, Pro Aurum. We use the best vaulting facilities in the world, pretty much, over in Zurich to secure. We use there's BDO for the auditors. There's insurance, Lloyd's and Helvetia. So we're I think it's an important business that's in the space. It's just plodding along.
Okay, right on. Are you guys considering issuing plastic as Voltoro?
We were very close, like years ago, to do that, to have a gold-backed debit card, and people could swipe and it would instantly sell. But the card issuer that we were going to use then got shut down by Visa, and so we spent like 6 months working with them to build the back end, and then when they got taken down, it was like, we don't want to spend all these resources again to do that. I think in the future we'll definitely do it again, but we're just focusing now on one thing for me is I really want to get euros into Voltoro. We've been Bitcoin a crypto only business since launching. That's
wow.
Not many people say that. So the thing is, right now I see all of these people that have a ton of fiat sitting in their bank accounts, and we've already had the canary in the coal mine with Silicon Valley Bank, with Signature Bank, now with Deutsche Bank Deutsche Bank wriggling, to say, Fedor Bank shutting down, that we need people to get their money. So we're going to put in euros very soon, and that will allow people to at least buy gold. If they don't like crypto, they can at least get their money and put it into gold. And the funny thing is, I was talking to our vaulting operator. They have pallets of cash sitting in the vaults now, cash instead of at the bank. Why? Because banks trust the vaulting facility, the private vaulting facility, more than they do the ECB. And not only that, it's cheaper to hold pallets of cash there. I mean, it might have changed now because the negative interest rates have gone up. But during the negative interest rate period, they didn't want to send that cash to the ECB, to the European Central Bank, because they would be charged interest on that. So instead, they store it at these private vaulting facilities at Zurich Airport. So yeah, it's a strange time, strange time to be alive. But I'm quite optimistic. I think there's some really great people working in the space. And one thing that Bitcoin did is it cashed up a lot of people that are philosophically sound in the ideals of freedom, and allowing those people the capital to innovate and to build things that are useful for the trajectory of freedom rather than the trajectory of tyranny. Because and sadly, I've seen this with a lot of even libertarian types. They've just headed towards just the right wing. But we all know that right and left wing is just a paradigm. It's just a false paradigm to keep us all bickering and separated and divided and conquered. At the end of the day, it's not left versus right. It's tyranny versus freedom. And that's the dichotomy that we're fighting: tyranny versus freedom, and slavery versus freedom. And so by building tools that allow that align with freedom, I think that's what's important, and that's exactly what Bitcoin and the crypto space has allowed a lot of people to do.
You're right. Now that's, I wanted to ask you if you saw a pickup in demand for Voltoro services as a result of the SVB crisis.
No, not particularly. No, I mean that's I think we saw a pickup because of the crisis when the pandemic was being scammed around the place. There people started to worry, and they would create an account. But the hard thing there was when there was the Wall Street bets guys started saying buy silver, and the Italian smelter workers couldn't cross the border into Switzerland to smelt more silver, and silver, funnily enough, was skyrocketing in the real world in value, but on the paper markets, on the spot price, it was staying still or even going down. Or just moving slightly up. But there was a definite divergence between the physical markets and the paper markets. So at that stage, but we were lucky because we have really good connections in the space. So we were managing to still buy bullion, but it was difficult at that stage. There was definite pickup at that stage. People wanted silver, and a lot of it. So I think it'll take something like Deutsche Bank failing, where more people, and I know many people in the gold industry, the whole industry was like, people were buying gold and silver, getting their money out. And in Germany particularly, Germans are pretty much the biggest savers in the world. They have more money in the bank. It's ridiculous. They don't invest. They basically save cash on banks. It's the stupidest thing. It's weird, but that's what they do. And so when the scandemic hit, they were just, they're like, oh, buy property, buy anything physical. And that's smart, because that's old grandpa the ghost of grandpa in their ear saying, buy gold, don't store it in the bank, because they saw the Weimar Republic. They saw the hyperinflation of German Deutschmark. They saw the absolute decimation of their currency multiple times throughout the last 100 years because of wars and everything else. So gold and silver, doesn't matter what war happens, gold and silver comes out the other side holding value, and now Bitcoin as well. I mean, Bitcoin's a bit different because it's less liquid. That's why you have the volatility, but it's finding its price, and eventually it'll get a bit more stable. But gold and silver is still the go-to thing. Yeah, and by the way, we shouldn't be constantly silver, gold. It's just it's old. Bitcoin's the new thing, and the gold industry, like Peter Schiff, screaming and saying it's a scam and this that. It's just dumb. We need to say the real enemy is still divide and conquer crap. The real enemy is fiat, is rehypothecated fiat and fractional reserve banking. That's the enemy there. Gold and silver, Bitcoin, Litecoin, cryptos in general, they're the things that should align together against tyranny versus freedom. That's
right on. Well, Josh, thank you so much for being with us. Thank you so much for being here and explaining what the standard is. Now I see people can follow you at thestandard.io, and that's also Voltoro.com. Where else can people follow you and what you're doing, and to follow up on everything you're involved in?
Yeah, stalk me at Twitter. I'm at JSCIGALA. That's at J Scigala. And I have my anarchist rantings and my tips and tricks and my scam. It was very hard over the last 3 years not to get banned, but now that Elon's there, I can be a little bit more vocal and
nice.
and it's relatively fine till now. We do need to find a better technology and not just trust the owner of a certain organization. So I also have been working with Nostr a little bit over the year, like just a little bit, not very much, but that's a great platform, and it's a decentralized version of Twitter, so people should get on there. I should follow my own. I should practice what I preach and use it more. But yeah, Twitter basically.
Awesome.
Is my best go-to.
Any last messages to everyone watching regarding the standard and what is to come in the world of DeFi and gold?
My biggest tip is, and I think this goes really down to the core, and it's a Buckminster Fuller quote, is you can't fight the existing system. All you can do is build something better and leave the old to be obsolete. And that's what we're doing. We're not sitting there with placards or begging the state for change. We just build something better and ignore the old and get on with it.
Awesome. Thank you very much for your time, Josh. Guys,
Thanks, Rafael.
thank you for being on. Thank you for watching this. You know where to find them, or you know where to follow him. Voltoro.com, thestandard.io. Peace, love, anarchy, guys. Take care. Bye.
Peace.